What's going on, y'all? Welcome to another episode of the Friday Wrap Up with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And yes, I am back from Colombia. What a wonderful time that was. I would highly advise to put that on your bucket list. What amazing people, beautiful scenery, beaches, coastline, mountains. I mean, it was kick ass. All right, let's dive in. Every Friday, I like to come to you and just discuss what happened this past week. So as we're heading into the weekend, talking to clients, open house, whatever it is we're doing, we can kind of be on the same page of what happened this past week, so we have the same talking points. And the big thing that stole the show this week were tariffs. Tariffs were the big thing. They came out, right? It was going to be fully imposed on Mexico, Canada. We had China in the mix, and then we had reciprocating tariffs. And then we said, oh, well, we're not going to do that to the automotive. And then the market cheered and said, yeah. So what we saw is a little sell-off in treasuries. Rates go up a little bit. Dow did great. Then more tariffs. So then the Dow had a bad day. It was just literally all over the map. As everyone, like I said, it's going to be a bumpy ride this Q1. And I expect it to now just trickle into Q2 with CR coming this week and quite a few things. It's just one of those things with these tariffs, as this administration is trying to figure out how to put pressure on other countries, it seems to be tariffs are the way. So is it going to work out? No one really knows. And traders, just like the rest of us, are trying to figure that out. But what it's leading to uncertainty. And as we know, in the real estate space, when you have uncertainty, you get mainly buyers, but you also get sellers that tend to now be in quicksand. Should I sell? Should I not? Is my job secure? What's the economy look like? What's going on with tariffs? The good news is that this uncertainty is pushing traders to put money into the treasury market because of the unknown. And what it's doing is it's trickling down into interest rates. Now, we ended the week this week for the first time in 5 with slightly higher interest rates than where we started, but it's the first time in 5 weeks. I expect a little sideways movement, and it came expected as well with the big data this coming week. We got CPI coming around again, and if you remember about a month ago, it came in super hot, came in at 5%. If we see something like that again, we see inflation just flying off the charts, we can absolutely anticipate that rates are going to skyrocket. If you recall, that 10-year treasury mark went all the way up to 4.8%. And today, I want to say we're sitting at about 4.3. That's a huge move. So with that, and then continuing resolution on Friday, I'm not surprised that we saw a little bit of a pause this week, a little bit of traders saying, maybe we want to be over here in the market and not so much in the treasury market. Wrapping up the week also, manufacturing appears to be on the rebound, which is something that during the past administration really struggled with. The underlying belly that the manufacturing industry is going to be doing much better here in the States. That's a great thing for the U.S. economy. The labor market did not show that it was slowing down as much as anticipated. Yeah, the employment rate ticked up to 4.1%. We've seen that before. Non-firm payrolls came in right almost in line. ADP fell off the map this week. But overall, it seemed like the labor market was finding some stability so far. And that's even with 10,000 layoffs with the government, which, once again, whether you believe it or not, it needs to be done. The government needs to get smaller. Fed Chairman Powell also spoke yesterday. He kind of closed out the week with the same sentiment of labor market seems to be stabilizing. They still believe that inflation is coming down to their 2% mark, which I don't know. I'm one of those that obviously over time I think it could. But look, they've had 2 years. They began increasing interest rates of March 2022, and we're still sitting at about 2.6% on inflation, and it was all the way up to 9%. So I don't know. As everyone that listens to this knows, I'm not a huge fan of the Fed, so no surprise there. As I already mentioned, rates end the week up for the first time in 5. And the other thing that Chairman Powell did say, we're kind of in this wait and see game. He almost basically came out and said that we have just uncertainty right now. We do not know what's going to have with the debt ceiling. We do not know the overall impact of inflation and so on and so forth. He actually said those similar sentiments in his speech, which actually pushed rates up just a little bit. People were kind of like, well, inflation, tariffs, and so on and so forth. So that's kind of how the week closed. I'm going to say it again. Use the bank's money. If you were listening to me and you had clients and you had made this suggestion and they had closed within the last 3-4 months, they're sitting awesome pretty right now. They're going to have the ability to refinance in a couple months because they use the bank's money. They use that extra yield spread to pay for those closing costs. So once again, if you do not know what that means, let's grab a coffee or let's simply jump on the phone. You'd be doing your clients a massive favor. And then buy downs, buy downs, buy downs. Once again, they're still working. If we're sitting in the mid sixes, a 1-year buy down's in the mid fives, and a 2-year buy down, you're sitting in the 4% range, 4.5% to 5%. So everyone have a great weekend. You need anything as usual, please do not hesitate to give me a call. I am back in Austin. Would be happy to meet up, grab a coffee, whatever the case may be, and be very hands-on for anything that you need. All right, y'all, have a great weekend, and I'll be coming to you on Monday with Weeds Weekly. Cheers.